last year, almost exactly to the day, 12 months ago, we were talking at this very conference where you have some of the best investors in the world about market corrections. And you told me at the time that there would be a 20 to 40% correction. What do you think today?
Well, what I said at the time was that in every cycle, at the end of the cycle, probably 6 to 12 months before the end of the cycle, there is the correction starts. The equity market peaks, and there is a correction in the average between 20 to 40%. I think that after the policies that every central bank, particularly the Fed, will adopt, probably this cycle will become longer. So therefore, the 2 or 3 years that we talked about last year probably is 2 or 3 years a year after. So I think that I'm relatively constructive about the market, so from where we are today.
But December was really ugly. And in fact, the last quarter of 2018 was ugly. How much, what's the probability of seeing a quarter like that again this year?
It's possible. We have 2 corrections last year. We have 6 corrections in the last 10 years in this cycle. And what it was interesting last year, in December, that the magnitude of the correction and the violence of it. So I was looking at the models that we use to predict recession in the next 12 months. The model based on economic data and sentiment data was giving a probability of the mid 20%. The model based on market pricing, it was giving 90%. Clearly, it was a massive decoupling. And when we look at the economy, when we look at even our retail data, what the consumers are doing, consumer confidence, what delinquencies and all that, clearly the US wasn't in December an economy that has 90% probability of a recession in 12 months. So it's not a surprise. The violence of the move, mainly driven by liquidity, and the violence of the recovery, because really the economy wouldn't justify that type of correction.
But what could be a trigger next? Is there something that could trigger it, or is it just sentiment, mood? Does it come from politics? Does it come from the way the market is functioning?
I think that the market is going to be watching what happened with the US and the global economy, is going to be watching what happened with trade, is going to be watching what happened with Brexit, and any other. This is the longest cycle that we have in a long, long time. So the market will be watching all these things. And because of the market liquidity, or the situation of lack of market liquidity, these overreactions may happen again. So who knows? But we have 6, we may have some more.
Do you think emerging markets are overcrowded? I feel like every person says this is the right time to go into emerging markets.
Not at all. I think that emerging markets, the whole backdrop for emerging markets is positive in my view. So we have the fact that the Fed probably will hold rates lower for a long period of time, a stable dollar, some stability in the growth in China, stable commodity prices, and recovery in Brazil. Even Argentina is a bit off the worst. So overall, there is a good backdrop. Year to date, we have seen flows into emerging markets across fixed income and equities, more than the whole year last year, but it's still a small fraction of what it was in 2016 or 17.
But so there's not a chance that suddenly we see really strong inflation in the US, the Fed has to hike, and that brings emerging markets back to...
I think the probability of that is very, very low. If that were to happen, yes, but I don't see that is a high probability at all.
Do you think anything, or do you see anything in the markets that they're either mispricing or misunderstanding?
No, I think that the market at the moment, even at these levels, is relatively rational and fairly priced. I don't think that the equity market is overpriced after the correction. I don't think that earnings growth is overpriced. I don't think that spreads are in the wrong place. So overall, the market is in a good place. So when you look at a market that is in a good place and an economy that is doing fine globally, so you can argue that the backdrop for market is good in the next year or 2.
What about Brexit? What do you do with Brexit and all of this?
Well, first on Brexit, we've been working so hard to be prepared to continue serving our clients if there is a hard Brexit on March 29th. My view is that that is not going to happen, but we are prepared.
So that's what, legal entities moving staff?
It is all the legal entity infrastructure in Europe. We will operate particularly 4 places: Germany, France, Luxembourg, and Ireland. So we're all done, all the infrastructure is done, all the technology is done. People will move along the way. So some we may start commuting for a period of time. We are not going to, we want to be prepared. We don't want to distract or disturb the life of people if it is not necessary. We do it gradually over time, but we are 100% prepared for the worst, and we hope clearly for the best.
What does it mean for markets? So first, has any of the pound volatility actually impacted some of your revenue on CIB?
It's one of the components, not really, it's one of the components. I think that the preparation is more a matter of bottom line and cost and investment in getting ready rather than the effect on top line. Clearly, the outcome of Brexit will have an impact in the UK economy and in the European economy, and that outcome will have an impact in the global economy. So therefore, we are correlated to whatever happens in the global economy. It will be an impact if it is a bad outcome, which I hope it doesn't happen.
But would it be systemic? So let's say there's I mean, given how votes won in Parliament, this would be a kind of a mistake, right? It would be something that it doesn't go to plan. Would the markets freeze up? Or
no, I don't think so. I think that banks and financial institutions are very well prepared for this. It may create a bit of volatility. I don't think that is a systemic issue. I think that is one of the components within a bunch of issues, not just one.
What are your plans for the bank in China?
Our Chinese business has been doing very, very well in the last few years. We appointed a new leader, Mar.14, to run it for us. We are investing in the business. We apply for licenses for our securities company with majority and with a path to full ownership over a period of time. So we will be prudent, but China is not an economy that you can ignore, so therefore we'll continue steadily investing, and as the markets develop, companies like JPMorgan can add a lot of value to financial services or the development of financial services in that country.
Then when you look at FICC, how do you see that developing? So what's the trend going to be like this year? Well,
it's been one of the most challenging business in the investment bank. 2010, the wallet for all the banks, according to Coalition, was $160 billion. The wallet last year was $96 billion. For us, it was very clear that it is a business that is a service that is very, very important to our clients. And the key of success was scale. So in a shrinking wallet, the only way to maintain scale is to increase market share, and that's exactly what happened to us. So our business at our scale is perfectly profitable. So in a fully loaded basis, produce a mid-teens return on equities, and on a marginal basis, produce really a very good marginal return. So we are super committed to that business. We haven't shrunk investment in that at all. And first, because it's important to the clients. And second, because it's profitable.
But so if scale is important, do you want to scale that up, or are you happy as it is in terms of?
We are perfectly profitable at our level of market share, so we don't have to. And it's not our choice, it's the choice of our clients to do more or less with us. But clearly we are investing to provide the best possible services that is possible. That's a consequence of that. Our scale grows, that will be great.
What are your clients telling you at the moment? What do they want, your clients? What are they telling you, A, about how they want to invest, and two, how they want to use your services?
Well, the clients are more and more interested in the client experience, the quality of the liquidity that you provide, the quality of the access to information and data, the quality of your analytics, and most important of them all, how do you behave in times like December, so that you are not a fair weather friend, so you are in the markets in the good times and the bad times. So that's what the clients care, that's what we do, and we have done it quite well.
So Dan, if there's another dip, is it a good time actually to go into the markets?
So when you talked about some of the clients that they go for value, I think that these guys are looking for opportunities to enter the market. And I think that is good. If it were to be another correction, I doubt, but if it were to be one like December, so if that offer value, and I think that people that are less concerned about day-to-day volatility and more concerned about value, they will go for that. I think that what we will see from now, after the recovery, that we have a period of probably of consolidation for a period of time. But I think that because of the economic backdrop, the markets will continue to be positive going forward.
And this is globally, or is there a region that actually, if you leave the U.S. to one side, does Asia do better than Europe, or the other way around?
Difficult to know. I think that the correlation among markets at this time in the cycle is going to be quite high. So, and there is no many mispricing that I see anywhere. So I think that it will be positive for everyone, hopefully.
Daniel Pinto, talk to me a little bit about JPM Coin. How's that going?
It's going well. So it's an idea. It's a prototype. We have recently put together all the wholesale payment business of JPMorgan. So the merchant acquired, commercial card, and the treasury services business, and we want to create really a big platform for wholesale payments. We also launched the Interbank Network, which is essentially a network of banks to share information and do more over time. The coin is related to that. It's a very effective way to move value 24/7, instantaneously, 365 days a year, in a very effective way. It really will help clients to optimize the management of liquidity, and it's $1, one coin, so there is no volatility there. So it's really a very good way to really extract value on the possibility of optimizing the management of liquidity.